So probably one of the most common questions that I'm getting on a regular basis is when people ask me, Kai, so which stockbroker should I be using to start investing? And I totally get it. I was there in the beginning myself, and there's so many options out there, right? I mean, not so long ago, people would only be investing through their local bank account. But these days, luckily, I think it's a great change. We have so many great options out there, but also a lot of bad options. So I think it's very important to choose the right broker that you can stick with and grow your portfolio over time. Because obviously you don't want to keep on changing every few months your broker, right? You really want to make a commitment, almost a marriage for long term to grow your portfolio. Now I'm a fan of having different brokers, but if you're just starting off, one might be perfectly enough for you. So the question is really, what is the one you want to go with? And in this video, rather than telling you what is the one that you should be choosing, I want to share with you 11 points to consider when you make your own research and due diligence and watch other videos online. Always keep in mind, obviously when people promote certain brokers, there's also maybe an incentive for them to do so, right? Which I think is nothing wrong, because often it's a win-win, right? I also have links down in the description below that you can use to open any of the brokers that I recommend and use myself. And in this case, both you and I will get a little bonus out of this, but still, I strongly recommend you to go through this list and really understand what kind of broker you're investing in to make sure you can really grow and stick with them in the long term. But before I go through the list of the points that you should be looking at before you're making a choice, the question is, what kind of investor are you? Are you a day trader? Are you a long-term investor? Now myself, I'm really a long-term investor, very much focusing on ETFs, but even if you invest into some bonds or individual stocks, as long as you have a long-term time horizon for your investments, those points are really relevant. Now, if you're a day trader or swing trader, now some of those may not be that relevant, but if you're really starting off and really want to build your portfolio long-term, then I think those will be really relevant for you. Now, the first one, of course, goes without saying, is the countries your broker is available in. And that's honestly sometimes a little bit limiting, because some of the brokers that I recommend, they are available in many countries, but not all countries. And then people say to me, Kai, but the broker you recommend is not available in my country. And sadly, there's not much I can do about it. But I think, some of those brokers that I recommend, and again, I can mention, for example, interactive brokers, I think that's the broker available in most countries around the world. I think there's only a handful of countries that they're not operating, but they're pretty much available worldwide. And I think that's super important, because A, of course, you want this broker to be available in your country. But for me, secondly, it's also important that I have a broker that can grow with me. Now, I'm a person who moves around the world. I've been living in many different countries. Now, currently, I'm living between Dubai and Lithuania. So I want an international broker. Having somebody like Interactive Brokers or Trading 212, they are really available in so many countries around the world. I think that's very important. Sometimes, if you only have a local broker that operates in one country only, that's great. But what happens if one day you move to another country, right? Will they be able to shift your funds there, or you have to sell them all and buy them back at a new broker? So that's something definitely to consider before you open your brokerage. The next point is the age of the broker. Now, obviously, you want to have a broker with a bit of a track record, right? The same when I make some investments. I also personally prefer investing into things that have a long track record, because I can see, how they historically performed. And the same is true for my broker, right? I mean, if I have a broker that literally just opened up a couple of months ago and has some great welcome bonus, well, that's amazing. But, can they be really sustainable and trusted long term? So, I think at least a couple of years of runway are helpful. Now, I understand a lot of those new brokers, obviously they have not been operating for 30 years, right? So within the broker space, if they have already 3-4 years of operations, that's already good. But if there's a broker operating less than a year or up to a year, for me, that's a little bit of a red flag, and I wouldn't really want to rush a lot of my money at least into it. Now, it's not a definite red flag, but something to keep in mind. Then, of course, we come to the range of offerings. And that's, once again, goes back to the first point, what kind of investor are you, right? Because some brokers, they specialize in different things. Some of the brokers specialize into forex trading or CFD trading, option trading, bonds, investing into commodities. So it really depends on you, but chances are, if you're starting off, you may not know that, right? So once again, I prefer a broker that has a wide variety of options for you, so that you can grow together with your broker. If they only do one thing, and that may be very good, but if one day you outgrow it or you change your investment style, like I did myself as well. In the beginning, I was really going after individual shares, but now I realized I'm really more interested into investing into ETFs. So if my broker would not support ETFs or not have favorable terms or fees, we'll come to this in a second, then it wouldn't really be a right match for me. So you really want to have a broker that kind of ticks all those boxes, that at least thinks that you see yourself doing very soon. Now, if they're really specialized into day trading, but you have no idea or no interest in doing that, then probably it's not going to be the right match, right? Then we come to the next point, which honestly for me is one of the most important points actually, and that's portfolio transfers. Now, that's basically the ability for you to transfer your shares that you maybe have with another broker, into the broker, so from your old broker to the new broker. that most of the brokers are doing, because obviously they have an interest of managing your money, right? That's how they generate some of their fees and income from having your funds under their management. So pretty much all of the brokers support incoming transfers. But the important part is that you should always look up before, is that broker allowing you to transfer your portfolio out to another broker if you so wish one day? Because who knows what happens 5 years, 10 years from now, right? A lot of things can change. They may increase their fees or have unfavorable conditions and you want to change your brokerages. And I was trapped in the same situation actually a couple of years ago when I started off investing through Revolut, and then eventually I switched to interactive brokers and I wanted to get my shares out of it, and it was actually really difficult, and now it's actually impossible. They don't actually allow share transfers anymore. So what you have to do then is sell all your shares, then you have to basically pay the tax on that, and then obviously rebuy them in the new brokerage. You lose all your records, your performance, how much the increase happened over time. So that's really not a good thing to do. So I really recommend you find a broker that allows you both in and out portfolio transfers of your own shares. Very, very important. Next up, goes without saying, you want to have regulatory compliance, right? Now, if the broker is registered in your country and can legally operate, chances are that they tick some kind of boxes. Now, they can get a little bit overwhelming, so I would always recommend to double check, have a quick Google around, because often they throw some terms around where they're regulated, but sometimes that may not mean much, right? If you're based in Germany and that broker is licensed and regulated in the Seychelles, well, then maybe, there's a bit of a mismatch. So it obviously has to apply to your local jurisdiction as well. So I think it's very important. Do a little bit of homework. Usually I go to the regulatory section, copy paste what it is, and then send it either to Google or ChatGPT, even better, and ask it, is that matching my regulations in my home native country, in this case Germany, let's say, and does it match up? Is that good enough compliance? And ChatGPT really does a good job with that, comes back and tells you whether it's good or not enough. So obviously none of us are legal experts, so I'm not an expert in this myself, but I definitely always make sure I double and triple check to make sure I really get the full coverage and not have some hanky-panky registered somewhere, which basically is nothing. It looks nice on the website, but doesn't really cover me in case something bad happens. Now, that of course leads me to the next point, and that's fund protection. Now, most brokers these days, they're going to show you some numbers front and center. We cover your funds up to 20,000, 50,000, 100,000. That's usually the highest. I mean, some of them have SIPC insurance. That's what you have to have in the US. That's based on your US shares in many cases. That's up to $250,000. So again, that's also something to consider. Now, in most cases, that fund protection only applies to the cash that you have sitting there, because your shares are usually kept in segregated accounts. So even if the broker goes bust, those shares will be bought up by another broker. But once again, you also want to make sure that this is really the case and they do segregate their funds, because if they keep it all in one pot, basically, then if the broker was to go bust, they could technically, sell those shares on your behalf and use those proceeds that they get from the share to pay off their liabilities. Now, I haven't heard many cases like that before, so I don't think it's a big problem, but especially for your cash, you want to make sure you are covered, because a lot of those brokers, they're actually offering great benefits, right? I keep a lot of my cash, most of my cash pretty much, with different brokers. For example, trading 2-on-2, I'm getting now 4.2% interest on my money. So you want to make sure if you have a large sum of money sitting there, that it is actually fund protected. Then of course, you want to make sure your broker is fully secured. Now, obviously we're not IT specialists, but there's basic things, right? Like really making sure that you choose a difficult password and that they really prompt you for it, right? If you choose a simple password and they approve it, that shouldn't be the case, right? Also, your broker should definitely ask you for two-factor authentication. That means, every time you want to log into your broker, you either have to confirm it on your phone or use your Google Authenticator or Authy, different ways to double confirm it, not just by password, but a second source of confirmation for the login. I think that's super important, because you just want to make sure, the broker is safe. Now, obviously at the back end, we can't control what they do with their own IT infrastructure. That goes back to the point of, how long have they been operating, the regulation and so forth. But I think the basic security should be in place, because I have seen some brokers that literally just let me log in with a password. And for me, I just don't feel safe about it. I usually use the apps on the phone as well, and I like when they have Face ID. So every time I open the broker, I have to use my face to unlock it. But for most brokers, more or less, that's something they definitely take serious, because obviously they're looking after your funds and quite a bit of money as such. Then we come to something that most people overly focus on, and these are fees and commissions. And I think that's especially more important in the beginning of your investing career, right? You have smaller amounts to invest. Let's say you invest 100 euros a month, right? If they charge you 1% or €1, basically the equivalent, that starts adding up. So that obviously goes directly out of your profitability. But as your amounts grow and your numbers get larger, in that way, for example, with interactive brokers, I do pay a small fee. Usually I pay around $1.50, but as I invest larger amounts, as a percentage percentage, it's really very little. And honestly, as my portfolio grows, that becomes less and less relevant. But of course, some brokers I've seen, they charge a maintenance fee or a non-activity fee, right? So if you're not investing a certain month, they will start charging you a fee, which is absolutely crazy. Or even deposit fee. Quite a few brokers I've seen, they charge a monthly or annual fee based on the size of your portfolio, a certain percentage, which is absolutely crazy. I mean, it's my money. Why would you charge me a percentage? I understand if you charge me when I buy something, buy or sell, fair enough. I mean, that obviously you want to have as small as possible, but I get it. But don't charge me depending on my size, because that's disincentivizing me to grow my portfolio. So if you have one day 1 million in your portfolio, then obviously what they get out of you will be significantly higher. So that's something I would never go for if somebody charges me an inactivity fee or a fee based on the size of my portfolio. If there are little trading fees, obviously you want to be particular what it is. If your portfolio is smaller, then definitely might make sense to go with a commission-free broker, such as, for example, Trading 212, which charges 0 commission, or even Lightyear on the ETFs, they do not charge any commission. So there are great options out there, but personally, I don't think this is the most important thing, but you obviously want to be very mindful of what they're charging you. I've seen some brokers even charging you on withdrawal. So every time you withdraw money to your own bank account, they charge you as well. So you have to be mindful, obviously look for hidden charges. Some of them show you front and center that they don't charge commission, but then at the back end charge you quite a little bit. They have a high spread built in or very high foreign exchange fee if you buy stocks in a different currency. So something to be mindful of, just like the other points, is one part of the puzzle. I wouldn't only focus on that. Equally important, of course, is the customer service, right? I mean, you can have the best broker where you pay nothing, but then obviously they also earn less money and therefore cut on customer service. So if the day comes when you do have an issue or you need to reach out to somebody and you can't because there's no person and only bots, well, then you start regretting maybe and understanding that sometimes paying a little bit for a good service might actually be worth it. And I had the experience early on with some different brokers where I was quite happy with in the beginning, but then I had some issue and literally for days and weeks, I could not reach a human being, which is absolutely painful, right? I mean, I understand that they obviously have to limit the amount of, personal interaction with everyone, but at the same time, there must be a way if you really have an issue that you can get in touch with the person. So for me, that's been very important. If I have a bad feeling that nobody can help me in the case there is an issue with my account or what have you, right? Then obviously for me, that will be definitely a red flag. Another point is, of course, you want to have a user-friendly platform. Well, whatever that means, right? Because some pro users, they might be used to some very difficult platforms to use because they just learned it after a while some beginners really want to have something very simple. Less is often more, right? So for me, it's very important. I mostly invest through my phone. So I want to have an app that's really clean, very nice, doesn't distract me with ads and trying to sell me some other investment vehicles. So again, that's very important. And that's why personally, before I open up any broker, I even just open the app store, look at the app, see how it looks, look up a couple of videos on YouTube, have a look how people present the app. And if that resonates with me, because obviously some of the apps, they're really nice and really clean, but I've seen a lot of brokers, it looks like they're stuck in the 80s. It's so difficult and cumbersome to use. Obviously, you want to have something that's easy and joyful to use, because if it's too cumbersome, trust me, you won't be logging in, you won't be checking, you won't be investing. It just feels like a chore, and it should be fun, right? Investing is fun. To see your money grow over time, it should be fun. So I think it's super important. And also you have to know, right? Is it important for you to have a desktop version as well? Because some brokers, they're so mobile focused that they only have an app available and don't have a desktop version, because some people still prefer doing those tradings and investing on the computer. So make sure you have that available as well in case that's relevant for you. And the last point has to do with the research and tools the broker is offering you. Because some of the brokers, they really obviously want to keep it very, very minimal and make it as easy for you to invest without any distractions, which is great, right? If you're just starting off, you may not want to have different research tools and so forth. But sometimes if it's too little, you literally have no way of making your decision. Now, of course, there are other great options out there, pages like Seeking Alpha, CNBC, and different tools that you can use free of charge. But sometimes as a beginning investor, you want to have everything in one app. So you also want to have an app that at least gives you basic insights into the stock or ETF or any investments that you're making for the matter. So make sure you're getting that out of the app. Because I've seen, once again, two extremes. Some of the apps, they literally give you absolutely nothing. You can either sell or buy. You maybe see the market capitalization, the price, and a few other parameters, but not much more to it. While other apps, they overwhelm you. There's too much information. I mean, for example, interactive brokers, I love it, but for a beginner, it might be really overwhelming because you have so many things, which is awesome, right? Because some other tools, they charge you for the information that interactive brokers gives you free of charge. So again, it's up to you. Maybe in the beginning, you want to have a more simple app, and later on, you can move to other tools such as interactive brokers that really gives you the whole menu of available information about a company or an ETF, which I think is powerful, right? It's ultimately up to you as an investor how much you want to use that to make your own informed decision. Today you have the 11 points that I think are really important to focus on before you make a decision of which broker you want to go with. Because as I said, it's really a long-term commitment. You don't want to jump around different brokers, even though if your broker allows you to transfer shares out of the broker into another one, of course, you're already more flexible and have the freedom to move around, even though it's still, in most cases, very cumbersome. It takes time. Most brokers will charge you for it. So it's not something you constantly want to be doing. Again, there's no right or wrong. Different brokers are suitable for different people. If there was only one perfect broker, everybody would be going with them. But obviously, as I said, it depends on you, your investing style, what you're looking for, and many other parameters. But I think this might be a good guide for you to help you find and discover your own broker. If you want me to make a dedicated video on this, kind of benchmarking different brokers out there against the parameters I mentioned over here, then just write in the comments down below broker comparison, and I know you're interested in that, and I'll be happy to make the video in the future. Next up, check out this video over here. As always, thanks a lot for watching, stay healthy, get wealthy, and I'll see you in the next one. Ciao!